The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' theme means it's time once again for the Option Block, your bi-weekly source of options news and insight and analysis and information, and then occasionally, once in a great while, perhaps some entertainment slips in there as well. My name is Mark Longo from theoptionsinsider.com, as well as the Options Insider Radio Network. And we have a great group of guests joining me on the old all-star panel today. All of them are returning regulars. One of them, I suppose you can call them an infrequent regular. How about that? So let's start off with him. He was on the show probably last about a year ago. He is Alex Jacobson. He is the Vice President of Education over there at Options Express. Alex, welcome back to the show, sir. It has been too long.
Thanks, Mark. I appreciate your having me back on. Actually, I'll remind you, last day I was on was first legal day one when Schwab took over Options Express. And we were doing the show from a closed room while everybody was out having a glass of wine and enjoying themselves.
I kept you from the party. That's right.
Yeah, exactly.
Well, hopefully you're not missing any fun parties or brouhaha going on over there at OX today.
There was nothing fun this afternoon with what the market was doing.
That's true. It wasn't exactly a day of champagne sipping on the street today. Also joining me on the old all-star panel today is our regular Thursday Mike, a.k.a. Uncle Mike, the man from the mountains himself, good old Mike Tosaw from Know Your Options, Inc. Uncle Mike, welcome back to the show to you as well, sir.
Always good to be here. It's good to be free. I guess I am frequent, and we'll let the viewers know I'm also regular.
Well, getting ahead of me with the BBI there, sir. And we should be joined a little bit later by the greasy meatball himself as well to complete the ensemble. And it was an interesting day on the street today, but before we dive into all that bloodletting, all that red on the screen, I have a wee bit of a rant I want to get off my chest, and perhaps you guys can join me or take the opposing point of view, whatever you like. But I spent most of the afternoon and the morning today over here in Chicago. Listeners may know, every year Morningstar puts on a big conference called the Morningstar Investment Conference. Quite very straight. Yes, very, very. There he is himself, the greasy meatball, joining us from his panic room, and
joining you from my second office, Ceres Cafe.
Yeah. Oh, there we go. Lovely, lovely. Hope the ladies are being nice to you there. The 80-year-old waitresses who work for that place.
Well, surprisingly, a new influx of attractive young ladies.
That's very contrary to the Ceres MO. I don't understand that.
Well, it's the new series.
The new sexy series.
Exactly.
Well, sexy series aside, like I said, I did just come back from the Morningstar Investment Conference, as you'd like to think, from pretty much the leading brand in mainstream investment analysis and education and advice and fund rankings, all that good stuff from Morningstar. You think they would have a diverse array of products and educational and investment approaches on display at this show. And granted, the the primary audience for this show is the active investment manager, the advisor, and a lot of the quote-unquote professionals out there. So it's not exactly for the mainstream retail audience, but still going to this show and walking around looking at the hundreds of, it was the biggest this show's ever been apparently, hundreds of booths, many panel sessions, thousands of attendees and exhibitors, and looking at the various panels they had. It was, from at least from our perspective, which was an options perspective obviously on this show, it was like it was 1981. It was amazing. There was not hide nor hear of anything options or hedging related to be found. Let me just read you some choice examples of the different panels they have. And I think my favorite one, I had to skip out on this one because I had to come do the show today, but today, right now, actually, as we're recording this, they're having a panel on risk control. It's called Risk Control, Dividends and Moats, Strategies to Enhance Equity Portfolios. And the description says, risk control isn't just about diversification. Join us for an in-depth discussion of stock selection strategies that combine valuation with an emphasis on the sustainable profitability, financial health, and dividend policies of companies. So in this world where everything's pretty much moving to a 1 delta of almost 100% correlation, you're going to get your risk mitigation in by stock selection. That's how you do it, I guess, from the Morningstar perspective. And going through the rest of their listings and going through the rest of the booths and talking to some of these managers of extremely large funds and saying, well, you have an income fund. Do you write covered calls? Oh, dear God, no. Do you have you talk about volatility in your prospectus. Do you trade volatility with, maybe downside puts or long volatility positions or anything? Oh, God, no. There's no liquidity in those markets, and I'm not registered for that, or I'm just terrified of those. It was amazing. It was truly it's hard to believe in this day and age you could amass so much under management and be a quote-unquote professional money manager and still be doing your fiduciary responsibility and not have some sort of hedging component to what you do. It's just amazing. Mike, I think if you were down at this show, your head would have exploded.
Yeah, just the thought of it just makes me cringe. I mean, it makes you feel better that you're getting the 6% dividend, even though the stock's down 32% on the year. I mean, that's just the rationale with a lot of that community. And you're right. It's sad that you have that much money under management and you don't have a plan in case it goes down. It boggles my mind to this day.
And obviously, this is an option show. We're preaching to the choir on this program, and you all have a little bit of a biased perspective when it comes to the investment products that we use and that we prefer. But still, I think it's pretty much beyond reproach, beyond doubt at this point that it pretty much is impossible to truly diversify, particularly from a volatility perspective, some sort of derivative component in your portfolio. It's just impossible. You can't do it through the old buy 12 different equities and you're diversified anymore. And yet that's exactly what Morningstar is out there preaching to these advisors and asset managers right now as we speak. It's mind-boggling. And this is 2012, and this is what passes for an quote unquote investment conference in this day and age.
What I always tell people to do with that, if their idea of diversification is small caps, mid caps, and large caps, draw a chart or just do it like a chart overlay. Go to your Options Express account and then do an overlay of the Russell 2000, the S&P mid cap, and the S&P 500 over the last 10 years and see just the huge range of difference that those three markets have performed. I mean, granted, there's going to be some differences here and there, and I think there's a spot for all three of those in your portfolio in one way, shape, or form. But to say that is, by just doing that, is diversification, I think that's laughable.
Now, Alex, this is my first time at the Morningstar show. I've avoided it in the past just for this reason. And so my surprise probably makes you laugh a bit just because you've probably seen this a million times, and this is old hat to you, the fact that these mainstream institutions want no part of this stuff still to this day.
Yeah, it still shocks. I mean, I've been doing it as long as anybody, and in my previous life, that's really all I did at the SIBO and the ISC. And you look at, in a sense, the incredible job the SIBO has done by creating benchmarks of, the buy right and what you can do with collars and what you can do with hedges. And it's this huge success story. But when the SIBO says they've got 50 or 60 billion index to their benchmarks, you realize in the scheme of institutional money, that's nothing. It's nothing. It is unfortunately the rounding error. And one of the biggest challenges has been that institutional mindset that, we don't do derivatives here. I can tell you a story. It's sort of a story out of school, but there was a big fund manager with a big brand name fund, and he used to trade options aggressively, but he would cover his positions before the end of the quarter, so he didn't have to put them in his end of the quarter reporting. And it's just amazing. They're hedge funds that get compensated for doing the extra work seem to embrace options more. Individual investors who clearly are in many instances better educated than a big fund. I mean, you think just because somebody runs $100 billion that they're clever? I mean, often there are people running $100 or $200 billion who just try to be stock pickers. And to Mark's point and to Mike's point, you know, if you look at the last decade and you've owned stocks and you've not done something, it's a lost decade. You haven't made money. And simple things like the SIBO buy right, owning the S&P and replicating the BXM, the cash flow is averaged, last time I looked, I think 1.8% a month off the option. So even if you're unchanged for the last decade, you've earned 1.8% a month. You know, every day, again, I'm preaching, and this is why you probably don't have me on that much. But you know, every day we hear the numbers
among other reasons, Alex.
Yeah, thanks. But you know, every day you hear the numbers out of government pension plans, and the old defined benefit plans, the legacy plans, and the teachers' plans and the fires plans. And one of the biggest problems they've had is they haven't made any money in a decade. They haven't made any money in a decade. You know, in Illinois,
because they keep going to conferences like this.
Yeah, well, where we're 70 or 80 billion underfunded. You know, think about the fact that most of the money under management has made nothing in the last decade.
If
you'd made 6, 7, 8%, you know, just in simple cash flow, which, as Mike pointed out, you know, not hard to do from options covered writing, you'd be probably close to being fully funded.
Yeah, you know, it's a story that is lost on, I think, everyone I saw this afternoon. I'll leave you. We'll close up the rant section of the show with this.
Let me throw in my 2 cents.
Oh, you throw in your 2 cents before I close up the rant section.
I
know you are prone to a rant or two in your day.
I'm going to say the same thing that Mark Lago was going to say. It is shocking how lazy and stupid big money is. If the general public knew how much smarter they were than lazy, stupid big money, there would be no accounts at any of the big banks. It is unbelievable. So that's exactly what Mark Lago was going to say. So I'll throw it back to him.
Are you actually at Ceres? Sounds like it.
Yeah, I'm actually at Ceres.
You are? Yeah. What, on your laptop?
Yes, I'm on my laptop at Ceres.
With the headset? Really? I'm just amazed. All right, that's fantastic.
Party, man.
But I'll leave you with this little story. So I'm leaving the show today. I'm walking past all these booths. I'm at the end of the exhibit hall, about to leave. I passed how many mutual funds that promise emerging markets or income or dividend, whatever nonsense they were pitching. And I get to the end, I see a booth, not an options booth anywhere. At the last row, the last corner booth, I see the International Securities Exchange. I was like, oh, ISE, they're here. Wow, an options booth, an oasis in this land of lack of options knowledge. So I go over to their booth, and sure enough, there they are, and they're pitching alpha indexes. They're pitching all their proprietary, essentially ETF and index products. Nary a mention of options, even at their own booth. This is the largest equity options exchange going in the country, and are right up there, number 2 or number 1, depending on the month. But they know their audience and say, you know what, we're not even going to try. Talk about our indexes instead. So interesting stuff, I think, or perhaps infuriating stuff, depending on your point of view, from the land of Morningstar. And now, with that, we're going to close out the rant section and dive right into the trading block.
The trading block.
All right, and welcome to the Trading Block. This is, of course, where we discuss what was trading, what was moving the markets today, and as Uncle Mike alluded to at the top of the show, it was a wee bit of a bloodbath on the old street today. Most of the major indices down about 2%, the NASDAQ pushing 2.5% today, and, of course, the good old VIX cash back to the upside, up 16.5% to 20.08. And perhaps, Uncle Mike, since this was such a perfect day, perfect storm BBI day for you, with gold down and the Apple index down and most of your other holdings down. First off, let's start there. How was the BBI today, Uncle Mike?
Not too bad. Did a couple moves on Apple with just my latest back spread / covered call combo, and just did a couple things there. And it's with Apple, it's actually kind of relieving because it's been over the last week or two, it's been just kind of dormant and not moving as much as I prefer for all this back spread movement that I've been doing on it. But we're doing okay with that right now. And with gold, we're not in gold on a collar. We haven't been for probably the last 4 to 6 weeks, or actually probably even longer than that. We're just short the 150 put, and we're hedged at the 135 level. So we're kind of in a bull put spread right now, and kind of a holding area with gold until it starts actually moving upward again.
Yeah, that's true. You actually had that back spread position on an Apple where you actually need some of this movement. You need some of this vol in order to do stuff, as Andrew likes to say, in order to make that position work for you. So from that perspective, this isn't exactly a bad outcome for you. Gives you something to do on a day like today too.
Yeah, it's true. Get to click the old mouse pad a little bit, throw some business towards my friends over at OX.
And when you're not over there drinking in series today, Mr. Sebastian, what caught your eye in today's market movements?
The lack of VIX movement relative to the sell-off. That would be the big thing that I was looking at. I thought that.
So 16 handles doesn't do it for you. 16% doesn't do it for you, huh? What were we looking for? Like 20-odd%?
Sell-off. On a 30-handle sell-off, I would like to see the VIX, especially with it at 17. I'd like to see the VIX trading. It should have picked up about 4 points, I think, between 3.5 and 4 points. Clearly, certainly no panic in VIX movement. Almost the entire move was just sliding down the curve. It really was little or nothing to do with actual buying of options. Now, maybe that has to do with some of the other little tidbits we've talked about in terms of its sensitivity, but I did not. I think the VIX should have been moving much harder than it did.
So why do you think that was? Why do you think
you disagree?
Why do you think we just slid down the curve as opposed to gapping up and seeing some nice premium bounces out in there, out in those VIX products?
I don't think people are that worried about a massive sell-off here. I don't know. You tell me, but $2.84 is not, on a 30-point move, moving from 17 to 20, 17 and an 8 to, or excuse me, 18.20 to 7 to 20 is not going to do it for me. I just not, or 17.20 to 20, not scary at all. And the market's not acting like it's really, there was no fear. It was like people were watching idly buy as the market sold off. It didn't seem any real interest in this. I think this is setting up for a big buy. The other nice thing is that oil is getting set to start adding to the GDP because it's fallen so much. That's something to be aware of.
Yes, that's the one bright spot in all this data we've been seeing lately.
Rebob is at, if you know Phil Flynn?
Yes.
He and I were talking, and he was saying, with what's going on in nat gas, in his voice, with what's going on in nat gas and, what's going on in oil, it's entirely possible that the 2012 highs that we saw might be the highest price we ever saw Rebob trade and ever do see Rebob trade, at least for the next 5 years. And you know what? I thought about it, and he's possibly right, which would actually be a good thing for the U.S. economy and could potentially, be a little bonus, especially with China and Europe weakening. I don't know, Alex. What are your thoughts on kind of VIX and everything that happened today? Do you think $2.84 on a 30-point sell-off is the market buying into this sell-off?
I think it's a much longer explanation, but I think on sell-offs, VIX kind of understates what's going on, and I don't want to start a a thesis on this. I think it has a lot to do with the spider arbitrage and the liquidity in the spider. But I also think what you're talking about in terms of people not panicking and they've come to accept these levels is a big part of it. What shocks me in the last couple months was not the performance of VIX, but the volatility in the bond market. Because if you look back at the 80s and 90s, bond market was, nothing in volatility, 6, 7,
Right.
8. And you're in the 11, 12s, up into the 20s. I think that's where the fear is. And I think we all know that,
Right.
It's Greece, Cyprus, U.S. downgrades, Washington not accomplishing much. I think the volatility is in bonds today. And I think that's, in a sense, where that risk volatility has gone. Rates are nothing. There isn't a lot of alternative to stocks, but that doesn't mean people are rushing in, but it also means they're not rushing out either.
Right.
So I think 60 to 70% of it is exactly what you described. But I wouldn't assume if I was an investor that it's going to continue to be that way, because at some juncture you could get some news, either great news or bad news, and have big moves. I also think the market is thin in this pre-Volcker rule environment. I think a lot of the trading capital and the liquidity provider community capital and the desk capital just isn't there anymore.
Yeah.
Yeah. And I think that's a challenge for the entire marketplace going forward. I think, the big trading desks, the big liquidity providers have this concern of, seeing their chairman sitting in front of the House committee like Jamie Dimon trying to explain a hedge trade. And I think a lot of money is left the liquidity providers, which means when you get a move, you're going to get a little bigger move.
Speaking of the big banks, of course, the bulk of this bloodletting today, well, there's a couple of reasons, but the big really chopping at the knees came when Goldman came out and recommended shorting the S&P. I was trying to think the last time they came out with that big and that scathing and that bold. Does that mean
their desk is looking to get long?
Yeah, probably.
Yeah, that's what everybody says. As soon as you make a Goldman comment, everybody says they were selling in the morning. And the thing is, it was a slow news day because the Wall Street Journal put that up on the front page, and it said, here's Goldman's view. It's going to sell down to 1285. It's rare that you see Goldman be that specific in a public comment. But you also had this news. CNBC was reporting that Moody's is going to downgrade the banks today after the close. So you had sort of a piling on of bad news late in the day.
Well, I'm looking now. I don't see. Oh, yeah. 15 banks, but I guess that's expected. And they're talking about, they don't mention here.
Yeah, was anybody, selling off on news like that is like selling off on the news that the Chicago Cubs are going to be terrible. All right. Everybody knew. I don't get why we'd have any reaction. And I do think it had to do with Moody's going to come out today and downgrade the banks and just maybe and it's probably because there are guys that can't hold, banks that are rated so and so or lower, and I think we're setting up. I think today clears the way. Very rarely am I really bullish, but I think a day like today clears the way for a potential rally. Actually.
Yeah, it looks like there's a lot of potential setupops here. Particularly the fact that you're right, the vol didn't explode.
When the vol doesn't move and we have a big sell-off, we are going to rally.
It's poised to do something else.
We are lining up for a trip right back to 1400. I'm telling you.
There you go. 30 handles to the upside again. There we go. Or perhaps even more.
Sebastian called it on our show.
There we go.
You heard it.
All right, and with that cacophony of series in the background, we're going to close out the old trading block for today and dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. And as I mentioned earlier, I was running around at the Morningstar Investment Conference for most of the day, so I luckily have a resource in the old optionsinsider.com that I could turn to at times like this to pull up the unusual activity for the day. But even still, I'm going to keep it relatively short today because we are starting to run a little long, and we have a lot still to get to on the old show. So we're going to have an abbreviated Odd Block, and we're going to kick things off with Idenix Pharmaceuticals Inc., ticker symbol IDIX. This is the name that closed today down about 1% to $10.61. And this is the name that usually does about 2, maybe 3,000 contracts on a good day. And today they did a whopping 62,000 contracts. And all of that, pretty much all of that, came in the unwinding of one massive 60,000 contract trade that was put on a while back. And what we saw was someone coming in today and just unwinding this massive three-legged spread, essentially a vertical call spread that had been financed with the sale of a downside put, and taking it all off today. So we saw a customer coming in, picking up about 19,768 of the July 7.5 puts for about a nickel, picking those up to close those out. Then he sold out the July 12.5, 17.5 call spread, all each of those about 20,000 times each, for a whopping total of nearly 60,000 contracts on the day. If you look at the open interest on all these strikes, it essentially shows that these were all massive open positions that he's essentially closing out. And like we said earlier, it looks like someone had put on a massive vertical here on that 12.5, 17.5 strike, specking on some upside here, a pop in Idenix, and they were funding it with a downside put, a strategy we see quite often here on the old Odd Block. And looks like this one not exactly working out perhaps to this trader's favor. He's not rolling it out, he's just closing it out altogether. So closing out this 12.5, 17.5 vertical, and also closing out the downside put portion of this trade. Any of you guys out there, Mr. Sebastian, Mr. Tosaw, was this you, Uncle Mike, closing out your 60,000 lot here?
That was actually me.
Oh,
Mike,
that was you.
Yeah, Mike and I that actually was executed as a cross. Mike and I.
Mike and you.
Yeah, typically I don't take trades that small.
Tubby actually put up the whole
for my
trade.
personal account.
Yeah.
Yep.
It's the old Tosaw Sebastian cross. How
trade.
many times have I seen that, you know?
Yep. It was a cross only order.
When I used to watch those Tosaw Sebastian crosses going up on the floor, I just got the hell out of the way of those because you knew that was just size paper. You couldn't break that up.
It's like Citadel and Chicago Trading Corp hanging computers.
So yes, that's where, like I said, we're going to do a quick rundown here in option blocks. So we're going to start and end it here with Idenix.
Go ahead.
One
thing I would point out for our odd block is that the VIX July 40 calls. All right, Mark, where do you without looking, where are they trading?
I got to puul up the futures
Don't
info.
Look, just take a guess.
I got to pull up the futures. Oh, July 40s?
Future trading. Okay. Future closed 23.30.
I'm going to guess around 35 cents, maybe 40.
Yeah, the bid was 40 bid at 45. Good work.
There you go, sir. So how much? Let me pull it up here. Oh, yes, they did there is about 152,000 open on that strike right now.
Yeah, that's what I was saying. There's some decent volume there. Big volume on the 30s, not shockingly. I mean, but here's a question. Would you rather buy the 30s for $1.15 or $1.20 or the 40s for 40 cents?
You know, we have this discussion all the time. These guys pile in with size to gobble up this upside garbage. And when they could do verticals, they could do ratios, and it's so much better off. Looking at all these strikes here, I mean, the 30s have 150,000 open, the 32 halves have 150,000 open, so maybe there is some vertical on here that we're not seeing. But like I said, I'm just looking at a cursory glance of the open interest here. But it is very specific size to those three strikes, so maybe there is a vertical or maybe even a Tosaw style stupid going on out there for some size. Tosaw, are you playing in VIX stupids these days?
I haven't done anything with the stupid. I haven't had for the stupid to work. You got to have it lined up just right. And it's been a while since I've had the option stars aligned to do the stupid the way I like to do the stupid.
I actually do stupid style Tosaws most of the time.
Tosaw tends to prefer the rolling stupid, where he already has the more intellectual of the stupids, where you already have some money in your pocket, and then you double down on a cheaper strike.
In college, when I weighed about 220, they called me the rolling stupid.
I cannot picture you at 220, sir.
I didn't weigh 220. I was just making a joke.
I was going to say, if you were 220, that would be... Oh, never mind.
I was a fat little...
That would be an impressively large... I won't even get there.
Wait, maybe $140.
Alex, this is why you haven't been on the show in a while. We digress sometimes.
Yeah, I want to get an explanation one day as to what a stupid is.
A stupid
all
is
these
when
years you've been around in the education world, you haven't come across the old stupid?
Yeah, it's when you buy. So, a call spread would be buying like the VIX 30-40 call spread. The VIX stupid is when you buy the VIX 30 call and buy the VIX 40 call. It's stupid.
Yeah, they call it stupid for a lot of reasons. I mean, you can pretty much guess them off the top of your head, not the least of which you can't make up your mind of which strike you like better, so you pick them both.
So that's why they call it the stupid.
And Mike Tosaw loves to trade them.
You know what the Mark? Do you know what the? I know you know this. Do you know what the arbitrage symbol was for the stupid in the SPX pit? Do you remember?
I'm afraid to guess what you're going to say on this.
Do you remember?
No, I don't.
It was you'd make a gun motion to the side of your head.
Oh, you're right. You're totally right. You're right. You're right. Oh, the good old days. ARB signals. That's some precious knowledge I've allowed to slip out of my brain over the past 5 or 10 years.
Yeah, so it'd be like the 1250, 1275 call stupid, and you'd literally make a gun symbol to your head.
You're totally right. I had forgotten. I blocked that memory out of my head. All right, and with that imagery, that fantastic imagery actually, in our minds, we're going to close out the old odd block and dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that return of the rockin' theme means it's time for the boys over at OX to take the reins of the show and for me to relax and perhaps even sit down and have a nice, tasty beverage. So, Alex, while I'm sipping my beverage, what shall you be regaling us with, sir, today?
Well, just want to showcase 3 events that are coming up that are you can come to the site and get the exact details. But June 27th, we're going to be in Orland Park doing a 3-hour educational event. July 11th, we're going to be in Baltimore. And July 27th, we're going to be in Detroit. I will be presenting both in Orland Park and Detroit. And we'll hopefully be showcasing some new tools, but our general education night, we'll be talking about volatility trading, spread trading. So that's what's on the calendar. Talking to the desk today, we've already talked about the question on everyone's mind, which was what was driving us lower. And but that's kind of really all that's going on here.
Was it, I mean, I know you're not on the desk day to day, minute to minute, but what was your impression talking to those guys today? Was it a pretty frenzied day out there? Were customers panicked? Were they buying downside? Were they keeping their powder dry? Kind of what were they seeing out there?
You know, what was interesting is I was sitting at the desk for the last couple of minutes waiting to get set up for this and watching CNBC, and Bogle was on from Vanguard. And the calls that were coming in, the few calls I heard were actually people who looked at the increase in vol and were selling some out-of-the-money SPX put spreads. So there seemed to be a bit of that going near the close. But there wasn't an overwhelming number of calls today, and that's sort of back to Mark's point. There just wasn't a general concern tone or a panic tone. Things seemed pretty orderly, and the desk didn't seem to be, overly in a position where they had to handle tons of calls. So, Mark's point is kind of spot on.
Yeah, go ahead, finish up.
Alex, it happens every once in a while. You know, the sun shines and a dog's hind end every once in a while, I always say.
You know, but that OX customer, we talked about this before, you know, the OX customer is typically on the more sophisticated end of the spectrum than your typical, you know, retail investor. So we would expect them not to panic, except for those people who were calling up Tim DeVabi panic to try to buy the Facebook IPO a few weeks ago. Those don't fall on the higher end of the spectrum.
Well, Mark, you know, I'm sitting here in Ceres, the epicenter of finance
in all things options related.
I mean, it's the epicenter of finance in Chicago, correct? Like if Chicago had a heartbeat for finance, Ceres would be its place where it pumps all the blood.
I think you're underselling it, sir. It is far more important than you're making it out to be.
It is, and you know, it's like nobody was even looking at the screen or talking about this sell-off.
You know, that's true. Like I said, I was at Morningstar all day, and one of the reasons I didn't check my screen all day was because it wasn't, you think in a place full of asset managers, they'd be a little more panicked, a little more interested, a little more tied to their screens and glued to their phones for their quotes and their computers than they were. It was pretty much a normal business as usual type of day, which is interesting for a bunch of guys who aren't hedged. You think they would be a little more concerned.
I think we're setting up for a big push higher. I do.
It certainly seems that way, you know. Like I said, if they're not concerned at Ceres, then none of us should be.
Exactly.
If those 80-year-old ladies serving at Ceres are not concerned, then I can wipe the sweat off my brow.
I've got a Longo special here for you, just waiting for when we.
They don't make the Longo special anymore. Which, listeners, for all of you who are confused and not from Chicago, Ceres is a bar/restaurant, mostly bar, in the bowels of the Board of Trade building over there, and they used to make the best mixed drinks in the city, to the point where if you got a vodka tonic, you would get a glass of vodka and then a can of tonic.
Oh, no, that's still what they do, Mark.
I've been there a few times in the last couple of years, and I've yet to experience that again. Perhaps, maybe for you they do it. Because they know you need full.
It's funny. You order the rum and Coke, they give you a glass of rum with ice.
Okay,
and a Coke.
Maybe we'll have to record the next option block from there to test that theory out.
Actually, we should do a live podcast from here. It would be great. They do private parties.
Yes, they have done. So I've done some other shows there in the past, and
and you know the thing is that you actually have to ask for the extra glass if you want to thin out your rum. Otherwise, you literally have to go swig, drink.
That's the old school way. So good to hear some things have not died over at Ceres, including the 85-year-old waitresses across the board. All right. And that's going to do it for the Xpress Block. And now we're going to dive right into the Uncle Mike Tosaw special, a.k.a. the Strategy Block.
The Strategy Block.
All right, listeners, once a week, Uncle Mike comes on down from the mountain, and he enlightens us with his options knowledge and his wit and his wisdom. Uncle Mike, what do you have in store for us for this week's strategy, sir?
I want to talk about contract selection. And actually, Mark, I'm kind of disappointed in your little birdies this week. Normally, the little birdies tell you what's going on. But
I'm too distracted by my Morningstar experience to even talk to my birdies today.
It even got to the birdies.
I'm flummoxed. We're all flummoxed.
Flummoxed? Wow. You're just a walking thesaurus. I love it. Anyway, what I want to talk about today is just the importance of the right contract selection. I was talking with someone probably about 2 weeks ago, and it just really made me think of this. And they were saying, well, what are some of the contracts you use? And I was talking about, well, we've used the SPX at times, we've used RUT, and just some of the bigger contracts, just because when we're doing a trade for somebody, it's not just one contract, it's typically over 100 contracts in a lot of instances. And so with that in mind, if we were to use a smaller contract, we'd end up paying more in commissions, and it's definitely not the ideal thing to do. And on top of that, there's a lot of other factors in terms of the 1256 contract treatment and a lot of things that happen with it. So what I want to talk about today is just some of the pros and cons of why you would use one contract versus another. If you're trading a 10 lot of SPY, and let's just say that you're just selling a 10 lot of puts on SPY and they're all cash secured, and you have a big enough account to where you could handle maintenance requirements, you may want to consider taking a look at the SPX. And the reason is that in theory, I mean, it's not, there's always ARB opportunities for when people want to put pretend guns to the sides of their heads in the pit and that type of thing. But in reality, for the retail investor, a lot of times you can get a very similar rate of return by using one contract versus 10 contracts. And if you're doing 20, 30, and 40 contracts on SPY, you may want to consider taking a look at the SPX. Does it make sense for everybody? No, not necessarily. And sometimes you have to consider what type of adjustments you're looking to make and what types of strategies that you're looking to use as well. So with it, I wouldn't necessarily be afraid of the larger contracts such as RUT or SPX. And if you're trading IWM and SPY, they're not bad by any means. I trade them both myself in certain instances. But just make sure that you have the right tool for the right job. Now, the other thing that I'd encourage everyone to take a look at as well is, where is the trading account? Is it in a joint account? Is it in an individual account? Or is it in an IRA? If it's in an IRA, my next point is going to be pretty much irrelevant. But if it's in a taxable account, one of the benefits of using index options is the fact that you get 60/40 tax treatment on it. And for a list of which index options qualify for this tax treatment, you can visit the CBOE website to find out a little bit more about that. So to give you an idea of it, let's say, for example, that I buy a call on Google and I sell it a month later and I make a $100 profit on it. The $100 that I make in profit on my Google call is going to be taxed at the short-term rate. However, let's say that I buy a call on SPX and I sell it a month later for a $100 profit. In that case, because it's a 1256 contract, it gets 60/40 tax treatment, meaning that $60 is going to be taxed at the long-term rate and $40 is going to be taxed at the short-term rate. So for most people, that's an obvious benefit. Does it make sense every time to use the larger contract? Not always. I mean, there's the smaller contracts that they have set up also for the 60/40 tax treatment as well. But my point is take a look at that. It may be something to add to your trading portfolio.
Thank you for that, Uncle Mike. And you're right, not to turn this into the SIBO hour, but they have certainly made it even easier for people to come out and pick up those S&P contracts, the SPX contracts. They have the electronic version, not exactly the most liquid contract, and the spreads aren't the tightest in the world. But still, if you're looking to the old reason people used to avoid it was big and because it was pit traded. Now at least one of those obstacles is gone. So, of course, you look at all their marketing for that now. It's all about the notional size. And why do 10 when you can do 1? So they're definitely embracing that, as opposed to running away from it like they used to in the past, the monstrous nature of that contract. All right, thank you for that, Uncle Mike. And now we're going to close out the old strategy block and dive right into Around the Block.
Around the Block.
All right, and those car horns mean it's time to look at our screens and see what we're watching, what's keeping our attention going into the weekend. And we'll start with you, Mr. Sebastian, since you're over there at Series, and I know a few more of those Sebastian specials, and you won't be very lucid at all. But what are you? I have a feeling you're going to be watching VIX to see how the weekend effect plays with it tomorrow, and if we start maybe perhaps seeing the beginnings of this rally tomorrow, or maybe going into next week.
Yeah, I mean, I think the way that we set up is there's a real good chance that this was kind of getting out the remnants of any stupid paper. And the reason why the VIX wouldn't move like this, it's funny that Alex brought up guys calling and selling put spreads. That is exactly what probably causes the VIX not to move the way it did. I think that we've got a lot of people that are starting to pick this now that we've cleared out a lot of the Fed problems. And the European silliness is at least cleaned up for a couple of weeks, I think. You know, I think if you look at the U.S. fundamentally, we're probably heading higher, at least according to a lot of people. And I think we're setting up, like I said earlier, run to 1,400, and I would be shorting VIX and probably going long SPX here.
Interesting.
That's me.
And then, of course, next week they can start taking the July 4th weekend out, and it'll be even more sorts of VIX
just
fun.
a bigger vol crush. Huge almost 4-point spread between the cash and the futures. I think short the July future is, short July future and long some SPX put or something is a layup of a trade right now.
Tasty proposition. Well, Uncle Mike, what is keeping you up at night these days? Is it just the Apple Index? Is it the gold? They said you're out of gold now these days. So now that you're out of gold, what are you doing with your time? You just watching Apple all day?
Well, not out of gold. We still have the short puts at the 150 level on GLD, along with a hedge at the 135 level. So we're not necessarily out of it. I'm waiting for just evidence, and I am still watching gold. It's funny. I watch it almost probably just as closely now as when I'm having the greater amount of exposure to it. So still watching it, looking for an opportunity to jump back into it at some point. But if it wants to just sit here, then I'll gladly, as my good friend Mark Sebastian would say, sell the preem, live the dream for the time being.
live that premium dream. Of course, I'm sure a lot of our listeners, speaking of sitting there and doing nothing, I know one of your other big holdings you discussed a lot on the show is Ford. A lot of our listeners, I'm sure, are also in the Ford or watching Ford pretty heavily. What are you up to out there in Ford these days? Are you selling the preem out there and living the dream, loading up more south of 10?
Selling the preem, but what I thought was interesting the other day was the December 11 call, because what I've been doing the last few months has just been selling the 11 covered calls on it. And what was interesting the other day, I was getting ready to get into something for either July, because whenever we have the 5-week expirations like this, it always kind of throws a monkey wrench in, so to speak. Not sometimes good, sometimes bad, but just I always look around to see what's out there. And what was interesting the other day with Ford is that December was paying, when I did the math, December was actually paying a pretty nice chunk of premium at the 11 level. So I sold the December 11 calls in Ford, not with the intention of necessarily holding it for as long as till December, although maybe, you never know, but just with the premium was high enough to where I felt justified in doing so. And so now I'm going to be looking to possibly get out of it and doing something along the lines of July, assuming we'll see what tomorrow brings with what the Ford 11 call volatility gives us.
Yeah, maybe some opportunities to spread with front month, because you certainly can't say the same thing about front month. Ford, not exactly a premium seller's dream, at least near term right now. So perhaps the only spot was those DC-11s, and you took them all out, Uncle Mike. So there you go. And I almost called you Andrew, Alex. And Alex, I know you're deep in the bowels of your various projects over there at OX, but when you pick your head up from the desk, what is catching your eye? What are you watching going into this weekend?
I'm looking at bond yields and bond vols, and as someone who grew up in the equity market, I think it's a real kind of interesting setup about what's going on in bonds. The U.S., the German, the U.K. 10-year are all about the same yield. I think there's a lot of information about the perception of risk in the yields, and I think if those yields go a lot lower, it's going to be a difficult market. I think if those yields rally a little bit, I think it's going to be good for equities, and it's going to be good across the board. To Mark's comment, I just don't see a lot of stuff that scares me. As I say, when you look at bonds, the thing that scares me is when you look at the Japanese 10-year, which is half the yield of the U.S., the German, and the U.K., and that's my big concern, that the Fed just runs out of bullets and rates spiral down from here. So I look at that as an indicator, and I look at that as kind of a weather vane.
Seems like a lot of people in these uncertain times are turning their eye toward bond land and to the yields and to that yield curve to try to find some evidence of what the heck is going on or why bonds are doing what they're doing.
I think there's huge information value in there. And we live in real interesting times. You know, I grew up when VIX was 8 and bonds were 8 in terms of vol, and today VIX is 20 and bonds.
They had the VIX in the 1870s?
They did, but it wasn't called the S&P. It was the precursor to it.
Oh, okay.
Thanks, Mark.
Yeah, a lot of love here for good old Alex on the show.
I'm just kidding. I love you, Alex. You know that.
But
Yeah.
you met Alex make an interesting point, and just to plug one of our other shows very briefly, last week on our Volatility Views program, we brought on a very interesting academic to discuss something that actually I hadn't really pondered that much in all the different topics I've discussed and analyses I've done, all the trading I've done, which is the relationship between underlying vol and the actual bond, the spreads on the corporate bonds on those underlyings. And I encourage any of our listeners who are watching the bonds like Alex and are very interested in what's going on out there right now to go download the most recent episode of Volatility Views. It was a fascinating discussion on and we actually got into some very specifics about how the each point of vol relates to those spreads and some very arguable relationships that this person has determined in his paper. So it was a fantastic episode. I encourage all of our listeners out there to go download Volatility Views and hear it for yourself.
Yeah, I think the information value in vol is much richer than folks ever realized. I think more and more people are beginning to embrace that. I will also tell you that in my lifetime, every major move in the market has come off what in hindsight was the low vol for the period. So I think there's a lot of rich information value in both. I know I keep coming across like an academic kind of geek, but I think if you look at the vols in bonds and the vols in the markets and kind of spend some time, I always tell investors you should have a Goldilocks view of volatility, and that's too high, too low, just right. I think you will start to develop kind of this intuitive what's going on here. And to Mark's point, as vol moves, I think there's a lot of information value.
Well, with that long-term view, that word of wisdom, perhaps we'll say, we're going to close out this Around the Block segment, and that's also, unfortunately, all the time we have here on the old Option Block show for this week. But before we go, I want to, of course, thank my cohorts, my partners in crime, including you, Alex, for joining us on the old show today. It's been far too infrequent, sir. You have to make a return appearance more often than, let's say, once every 9 to 10 months.
Hope so. Looking forward to
I know
it.
you already hit on the educational seminars in the Around the Block in the Xpress Block segment. If you want to hit on them again, by all means, go ahead. What's coming up educationally or anything else you want to let our listeners know about or to perhaps stay tuned for?
Well, just a quick reminder, and everything's up on our site, but June 27th, Orland Park, July 11th, Baltimore, and July 27th, Detroit. And as I say, I'll be in 2 out of 3 of those. We're still we did one in Naperville about a week back and, set the room up. And at 5 minutes to 6, the room was half empty. And at 10 minutes after 6, people were flowing out the door. So a lot of information value. They're all free. You could check on the site for dates and times, and worth coming out to.
It's because you're a rock star, Alex. That's why. And of course, you have some interesting stuff in the works over there. I look forward to being able to discuss that on perhaps an upcoming episode of the Option Block. We can get into some more detail because I'm sure that will very much interest our listeners. All right, and also thank you for joining us today from the land of series, Mr. Sebastian. And before you go, I know you just had the big extravaganza last week. What else could possibly be on the horizon for Option Pit right now?
I'm going to be doing doing a webinar on Wednesday at 4:30 Central Time on adjusting iron condors. And, of course, buy my book. Everybody buy my book. On page 202, there's a free month of Option Pit Live. So go out and buy my book.
If that alone is not reason enough to buy the book, listeners, then by all means, check it out yourself. Get a free month of Option Pit Live. What more could you ask for from
Mark,
a book?
And Mark, you'll say you like the book, right?
Hey, I'm on the book. I can't not like it, right?
There you go.
You'll find me right on the back cover. So therefore, let my words speak for me. And listeners, you'll see a blurb for that in the newsletter coming out tomorrow as you're listening to this show, actually. And last but certainly not least, Mr. Mike Tosaw, beaming in all the way from St. Charles, Illinois. I know a lot of interesting irons in the fire over at KYO. I'm not sure what you have you can discuss with us, what you can't, but perhaps give our listeners a little tease of what's coming up in KYO land.
Well, just a lot going on. Don't know don't know if I can really say too much at this point. Probably on next week's show, I'll be able to reveal a little bit more, but continue to read our newsletter, In the Know. We got a lot of people reading that right now, and just have a lot of stuff going on. And then in the spirit of my co-host, Mark Sebastian, buy my book, too. Buy my book.
That's true. We forget to plug your book. Yours is actually written by you, not you don't have any co-authors floating around, do you?
Joe Cusick wrote the foreword. That's the only.
Oh, well, there you go.
That's about it.
You got to cut him some royalties now. But yeah, your book, Go Long, I believe, right? Or Going Long?
Yep, Go Long, New Option Strategies for Buy and Hold Investors. Not to be confused with Jerry Rice's book, Go Long.
Hey, buy them both. I'm sure they have them recommended in a package on Amazon somewhere. Listeners who bought this also bought Jerry Rice's book. Because you and Jerry Rice go way back, right?
That's right. He's one of those wide retrievers.
Yeah, exactly. And of course, for more information on any of the topics we discussed on today's show, unusual activity, education, analysis, breaking news from the options market, by all means, surf on over to theoptionsinsider.com, or you can always find this program and many other fine Options Insider Radio Network programs on iTunes, Stitcher, Zune, or whatever your podcast purveyor of choice may be. So that's going to do it for the old option block. But before we go, all of us here on the old All-Star panel want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.